Okay guys, welcome to part 2 of support and resistance. Now a bit of recap and summary of what I've taught you in the previous lesson. Why should you learn to spot SNR? By now you should know the importance of it. It allows you to determine potential entry points, take profit areas, as well as areas to cut losses. I've also taught this in my beginner's course, so I'm not going to go into super basics, okay? Some of the rules of SNR. By now you should know this. Buy when price tests above support in an uptrend. Sell when price breaks below support in a downtrend. Take profit when price approaches support above support in a downtrend. I'll give you some examples. So you see an uptrend over here. In an uptrend, when you're looking for a buy trade, you don't want to buy at the very expensive price, right? You want to wait for price to come down and give you a cheaper rate. So you buy when price comes down and tests support, which is above support, okay? Support. So this is my support line over here. And then these are some points which you can look to buy, especially when there's a confluence with the moving average. When it comes to the downtrend, you want to sell when the price breaks below support. So you can see a support over here. You can buy when the price breaks this line. Okay, so this is what we call a breakout trade, which I've taught in my previous course. I'm not going to talk about breakout too detailed because I've already taught this in my previous course. But if it bounces off this support, okay, in a downtrend, should you buy here? No, because this is a downtrend. You don't want to be buying. You want to be selling when it tests a resistance, for example here, or even here. And if the price does come out and test this support which become resistance, you can sell here, okay? Never trade against the trend if you're a beginner. So in a downtrend, you can also use support resistance to take profit. Example, if you put a sell trade over here, example, or you sold somewhere here, then you don't know where to take profit. What you can do is that when you see price bounce off this support again and again and cannot break below, then you take profit. Okay, so when it comes to resistance, in an uptrend, you want to buy when the price breaks above resistance. In an uptrend, you want to take profit when the price approaches below resistance. And in a downtrend, you want to sell when the price tests below resistance. Again, give you some examples. So in an uptrend, you want to buy when price breaks above resistance. So I have a resistance line over here based on these 3 points. And in a breakout trade, you want to wait for price to break above the resistance and then you make a buy trade. And in an uptrend, let's say if you made a buy trade somewhere down here, okay, and you don't know where to take profit because there's no recent swing high, so you can take profit when the price approaches below resistance. You can see my resistance line over here, and when you see price test the second time over here or third time over here, you take profit, okay? And in a downtrend, you sell when the price tests below resistance. So in a downtrend over here, and up my resistance line over here, and when you see price test for the third time, okay, and it gives you a bearish signal, what you can do is that you can potentially open a sell trade. So again, you can sell when the price tests below resistance in a downtrend. So you can see price tests this resistance line a couple of times, and you can look for sell points in any of these test points. Now of course with breakouts, there's going to be false breakouts, so you gotta learn how to spot them. To prevent you into trading false breakouts, you need to learn to draw zones. So I've already explained to you how to draw zones. Just draw the best fit area, okay, where it touches the most amount of points. Again, try not to draw it way too wide because the wider it is, then the higher is the margin of error. And the second way you can prevent false breakouts is you need to look at the duration of the breakout. So there are some people, if they trade a daily chart, okay, daily chart, they are going to wait for 2 candlesticks to be formed above the resistance line, okay, and then they are going to say, okay, since it went above the resistance for 2 days or longer, then we can make a buy trade right after that. But I find that this is not very accurate because sometimes price can break above for 2 days and then it can still come back down, okay? So this is not my favorite strategy. this is one of my favorites, which is the price action filter. If the price breaks above resistance, and then it gives you a bearish signal, and in this case, it kind of gave you a hammer or bear charmy pattern, which is not so perfect, but all in all, these two candlestick patterns is a bearish signal. So you know that this is a false breakout. Okay, you don't have to count candles, you don't have to count the time, you just look at what the price is telling you. So this is why I feel that is more accurate. And some people might ask, Karen, why don't you use pip filter? Like if it breaks 500 pips above resistance, then it is a real breakout. How about if it breaks 600 pips above? Or should the filter be more, 700 pips? It depends on the currency pair. Some currencies that are more volatile, you need to give it a little bit more pip buffer. For example, 500, 600. For those that are not volatile, you can put a little bit less, maybe 200 or 300 points. But I find that it is not accurate as well, and it's not one of my favorite strategies, because sometimes price, you realize that it can break above resistance for 1000 points, and it can still retrace. Because if you ignore what the price is telling you, it can still retrace. So for example, you can see the price broke resistance over here, and it gave you kind of like a doji signal, okay, which is not super perfect, but after a doji is formed, you see a bearish candlestick signal. By now, you should already know that, okay, this might turn out to be a false breakout. And yes, it did. The price, instead of going up, it continued to go down. So these are false breakouts. So I drew this resistance based on a best fit of this point and also this point. Okay, so aside from pip filter, you can also use 5 EMA to spot false breakouts. Now, this is one of my favorite ultimate strategies to spot false breakouts. You can see that I drew a straight line. So if you don't want to draw a zone, and if you choose to draw a straight line only, then you would draw based on this point, and also you can see price come up here and test this point, bounce off. Now if you don't use 5 EMA, you would think that this candlestick, this green candlestick, would indicate a breakout. But if you've put in your 5 EMA, which is this blue line, okay, aside from the fact that 5 EMA act as a magnet, where when the price detach from 5 EMA, example over here, it's going to come back to 5 EMA, right? When it detach over here, it's going to come back. So the first function is it acts as a magnet. Then the second function is it allows you to spot which are the real breakouts, which one are the false breakouts. So like I said, back to this example, back to this candlestick over here, the whole entire candle is above the resistance line, right? But look at where 5 EMA is. The position of 5 EMA for this green candlestick tells you that this candlestick, in real fact, it is still below the resistance line. Because what 5 EMA does is it tells you the real position of the candlestick, which is what I've covered in my beginner's course. For example, if you look at this candlestick, where is it located really? On top of 200 SMA or below 200 SMA? You look at 5 EMA. 5 EMA tells you that it is still below 200 SMA. So hence the real position of this candlestick is it is still below 200 SMA. So the real position of this green candlestick is actually, in real fact, still below the resistance line. So basically, you don't look at the position of the candlesticks, you look at the position of 5 EMA. Now, of course, one of the ways that you can further confirm that this is a false breakout is you can add your oscillator, okay, as a confirmation. So back to the same example again, you can see our breakout candles over here, which is a false breakout. So you can add 5 EMA confirmation with oscillator confirmation. This is enough. If you don't want to draw zones, you can just use these two strategies. Give you one more example. This is a downtrend over here, and I drew support based on this point, and also this point. And you can see again, this candlestick. Now can you tell me, is this a real breakout or a false breakout? If I zoom in, look at where 5 EMA is. Remember, you don't look at the position of the candlestick, you look at where 5 EMA is. So hence, for this candlestick, the 5 EMA, it is still above the support line. And at this with oscillator confirmation, look at where CCR is. It breaks out on an oversold level, and hence, this further confirms that the price is going to retrace from here. This is a false breakout. If you look carefully, you have a big red candle followed by a small green candle with small body. So this is an imperfect bullish harmony, which also tells you that price is going to go up from here. So one of my favorite ways to spot false breakout is to use 3 strategies. The first one, look at what price action is telling you, look at what candlestick is telling you. Second thing, look at 5 EMA. Third thing, look at oscillator. Okay, I don't really use pip filter or time filter. I know some people use that, but if that is more comfortable with you, feel free to use that. Okay, I'm just giving you different options for you to pick a strategy that you're comfortable with using. Okay, so with that, I hope that this lesson gives you a clear idea on how to use support resistance, and also how to use it to trade breakouts, and how to use it to spot false breakouts. So with that, I'll talk to you in the next lesson. Bye.